Hey everyone, welcome back. Today, we're going to take a deep dive into something I'm sure is on a lot of your minds these days, life insurance. And specifically, we're going to be looking at the Transamerica Financial Foundation, IUL 2L.
Ah, yes, the FFIUL too.
Exactly. We're using their consumer brochure as our guide today. And we know that a lot of you out there are looking for more than just a basic policy, right? You want lifetime coverage, and you want the chance to build cash value.
Makes sense.
That's where IULs come in. Now, this brochure really emphasizes that the Transamerica FFIUL2, it's designed to be more than just a death benefit, to quote them directly.
Just a death benefit, huh?
Yeah, and it's no wonder people are exploring these options. I mean, get this, 38% of Americans say their household would face financial hardship within 6 months if a wage earner died unexpectedly.
Wow, that's a big number.
Yeah, it really
It's
is.
a sobering statistic, and I think it really highlights just how important it is to have a solid financial safety net in place.
Absolutely. And that's where this deep dive comes in, right? We're going to break down this brochure, see how the FFIUL2 aims to address those bigger financial concerns that a lot of us have, like outliving your savings or facing unexpected costs due to a serious illness.
Yeah, those are big concerns these days.
Huge.
They actually list out 5 key features in this brochure that they really want to highlight. So there's death benefit protection, growth potential, downside protection, tax advantages, and then optional riders. So you can really tailor the policy to your specific needs.
5 key features. Lots to unpack there, I've got to say. The section on how the cash value actually accumulates really piqued my interest. It explains that a portion of your premium goes into either index accounts or a basic interest account, and both have the potential to earn interest on a tax-deferred basis. So it's not just sitting there.
Right, it's working for you.
It's working for me, yeah.
And that tax-deferred growth is huge. I mean, think about it this way. Your money is compounding without a chunk being taken out for taxes every year. So that can make a significant difference in the long run.
Makes a huge difference. They also really play up the choice and opportunity that you have with this FIUL2. You've got different index account strategies, like cap rate and participation rate, and then a range of index accounts to choose from. It feels like you're kind of building your own mini portfolio.
You got that right. They even include this really helpful visual in the brochure to explain the concept of floors and caps. So imagine like a safety net, protecting you from big losses, but there's also a ceiling on how high your gains can go. That's essentially what floors and caps do in this context.
I love a good visual. Way easier to understand than just reading about it. Let's dive into those index account options.
Yeah.
Because, I think everyone listening wants to know about potential for growth.
That's
right?
sure.
So we've got the S&P 500 index account, which, does exactly what it says in the tin,
Right.
tracks the S&P 500. But then it gets a little more global. They have the global index account.
Yeah.
Incorporates the Euro, Stoxx X 50, and the Nikkei 225. So you're not just limited to the U.S. market.
And if you want even more diversification, they've got the Balanced Uncapped Index account, which uses a mix of indexes, including the Fidelity Small Mid Multi-Factor Index. Of course, each option has its own potential risks and rewards, right? The key is really understanding how each index works and how they're weighted within that account.
So now for the part that probably has everyone's ears perking up. Tax advantages. Tax-free death benefit. Check. Tax-deferred earnings. Check. They even mention tax-free transfers within the policy and the potential for tax-free access to the policy value through withdrawals and loans. Feels like they've really tried to create a tax-efficient haven here.
What's really fascinating here is how those tax advantages can be a game changer for your long-term financial planning. It's not just about saving money on taxes today, it's about how that can potentially boost the growth of your cash value over time. And then, down the road, you might have more flexibility when you need to access those funds.
And speaking of flexibility, they emphasize that you can actually adjust your premium payments, within limits, of course, if your financial needs change. So need to increase, decrease, or even skip payments altogether. Sounds like they've built in those options, as long as there's enough policy value to cover it, obviously.
Right, and kind of underpinning that flexibility is the no-lapse guarantee. Essentially, as long as you pay that minimum monthly premium, your coverage is secure. They actually have a nice visual in the brochure that breaks down that step-by-step process, showing how the premium payment, the fees, allocation, and potential growth all work together.
But, and there's always a but, right? Paying just the minimum might keep your policy active, but it could also mean slower cash value growth. It's all about finding that sweet spot, I guess, between security and really maximizing your potential returns.
It really raises an interesting question, doesn't it? Like, what are your top priorities when it comes to your financial goals? Is it the peace of mind of that guaranteed coverage, or are you really aiming for maximum growth, even if it means adjusting those payments along the way?
Okay, so we've covered the basics. We've talked about cash value, those interesting index accounts, even the tax advantages. But wait, there's more. You can personalize the policy even further with a whole range of riders. We're talking terminal illness, chronic illness, critical illness, even overloan protection riders. It's like they've thought of every possible scenario.
It's all about creating a policy that truly reflects your individual circumstances, right? Each rider offers these additional layers of protection or benefits that kick in under specific conditions. So, for instance, let's say you're concerned about the financial burden of a chronic illness. They have the chronic illness rider, allows you to access a portion of the death benefit if you meet certain criteria related to your health and ability to perform daily activities.
And there are even more rider options available. Like they have the concierge planning rider, which gives you access to services like funeral planning assistance and more preparation tools. It's incredible how in-depth they've gone with this. But, we love getting into the details. So let's jump into the product details section of the brochure.
Ah, yes, the nitty-gritty details. This section might seem a little overwhelming at first glance, but it's crucial to understand these key elements. We're talking policy type, minimum face amount, that no-lapse guarantee period we mentioned, death benefit options, and the list goes on.
And don't forget about the index account options and that all-important guaranteed minimum interest rate. It is a lot to process, but we're going to break it down for you.
Absolutely. We'll walk you through some of the most pertinent details so you can get a really clear picture of how this policy works.
So let's start with the basics. The Transamerica Financial Foundation IUL2 is, you guessed it, an index universal life insurance policy. It's available to individuals from ages 0 to 85. And there are different risk classes based on things like your health and whether you use tobacco.
Right, and they offer a few different death benefit options, level, increasing, and graded. Importantly, the policy comes with a no-lapse guarantee period. So if you pay that minimum monthly premium, your coverage is guaranteed for a certain period, which can range from 5 to 20 years, depending on how old you are when you get the policy.
And remember, all those index account options we talked about, well, they all come with a guaranteed minimum interest rate of 0.75%. So that's your safety net, ensuring at least that much growth regardless of what the market does.
They also offer a basic interest account, which has a guaranteed minimum interest rate of 2%. This account is really all about stability. A good option if you're prioritizing a guaranteed return on a portion of your cash value.
Now let's talk about how you actually get this policy up and running. The brochure boasts about faster protection, thanks to their streamlined underwriting process.
It sounds like they've made an effort to make things a little bit easier.
Yeah.
You'll still go through the usual steps, answering medical questions, possibly having a paramedical exam, waiting for the underwriting decision. But they do highlight their digital application process as a way to speed things up.
And finally, the brochure wraps up by emphasizing Transamerica's long history and financial strength. They really want to assure you that they're a reliable and stable company that will be there to honor its commitments.
Makes sense to highlight that. Choosing a life insurance policy is a long-term decision, so you want to feel confident that the company you choose will be there for you and your beneficiaries when it matters most.
Absolutely. All right, so we've covered a lot of ground in this first part of our deep dive into the Transamerica Financial Foundation, IUL2, but we're just getting started. Stay tuned for part 2, where we'll continue our exploration of this policy and delve into even more details about how it works and what it can offer you. Welcome back to our deep dive into the Transamerica Financial Foundation, IUL2. It's interesting they close out the brochure talking about stability, because as we've been discussing, the FFIUL2 itself, it seems like it's really designed with this balance of flexibility and security in mind.
That's a great observation. It's not just about feeling good about the company, right? It's about having confidence in the product itself. So we've covered a lot of ground here. From how that cash value accumulates to those different index account options, what stands out to you as the most compelling aspect so far?
That's a good question. I think for me, it's that blend of potential for growth, but with that built-in downside protection. Having a guaranteed minimum interest rate on both the index accounts and the basic interest account, that provides a level of certainty that you don't always find with other investment options.
I agree. It's like having the best of both worlds. You have the opportunity to participate in those potential market gains, but you also have that safety net if the market takes a dip. And we can't forget about the ability to customize your coverage with those riders we talked about. That's a major plus in my book.
Totally. The riders let you really personalize your coverage based on your own needs and risk tolerance. I mean, recognizing that one size doesn't fit all when it comes to life insurance, right?
Right.
Whether it's additional protection in case of a critical illness or the ability to access funds early if you're diagnosed with a terminal illness, those options really put you in the driver's seat.
And speaking of things that can give you a sense of control, let's zoom in on those flexible premium payments that the brochure highlights. I mean, this can be a game changer for people who anticipate changes in their income or expenses down the road. Having the ability to adjust your premium payments as needed can provide a level of financial control that can be so valuable.
Imagine being able to adjust your payments if you decide to take a career break or start a family. That's the kind of flexibility we're talking about. But of course, there's always a trade-off. Paying only the minimum might keep your policy in force, but it could also limit your cash value growth.
Exactly. It's all about aligning those premium payments with your overall financial goals. And really, how much risk you're comfortable with. If you're okay with potentially slower growth in exchange for lower premium payments, that's a perfectly valid strategy. But if you're really aiming to maximize that cash value growth, you'll probably need to pay more than just the minimum.
And the brochure does a nice job of visually laying that out. You know, how those premium payments, fees, and potential growth all work together.
Yeah.
It's one thing to hear about it, but to see it visually can really make a difference.
Oh, for sure. Visuals can be so helpful when it comes to understanding financial concepts, right?
Definitely. It's like seeing a complex machine in action instead of just reading a description in the manual.
Exactly.
Speaking of visuals, let's go back to that graphic that shows how much gain is needed to recover from various levels of loss. It really drives home the importance of that downside protection we were talking about earlier.
Yeah, it's a powerful reminder that even small losses can require substantial gains to get back to even. But as we've seen, the FFIUL too aims to address that concern by guaranteeing that minimum interest rate on your cash value, no matter how those underlying indexes perform.
It's like having that safety net built right into your policy,
Yeah.
which can be really reassuring in times when the economy feels a bit uncertain.
Absolutely. It offers that peace of mind, knowing your cash value has some protection from big losses, while still having a chance to grow if the markets are doing well. It's all about finding that balance between risk and reward, right?
Right. So we talked about flexibility, but let's get back to those index account options, where you
Yeah.
have those choices to make. The brochure really focuses on the global S&P 500 and balanced uncapped options. But they do mention a couple more, don't they?
They do. They do. There's the basic S&P 500 index account, which is similar to the standard S&P 500 account.
Yeah.
But it has a lower cap rate. So there's a limit on how much growth you can potentially capture, but it also comes with lower fees. So that's another trade-off to think about.
Right. And then, of course, there's the basic interest account, which we touched on earlier. That's more the conservative choice, right? Giving you a guaranteed rate of return without those potential ups and downs of the index accounts.
Exactly. It's a good choice for those who are prioritizing stability and predictable growth over the potential for those market fluctuations. It's also a valuable tool for diversifying your cash value allocation within the policy.
It's almost like having a mini portfolio within your life insurance policy,
You really
right?
like that, yeah.
You've got options to match your risk tolerance and your financial goals.
That's a great way to think about it. And you don't have to just choose one account and stick with it,
Yeah.
You can actually spread your cash value across those different accounts to build a strategy that really fits your overall financial plan.
Now, speaking of customizing your strategy, let's dig a little deeper into those optional riders. The brochure lists quite a few, and each one offers a really unique way to personalize your coverage.
It's all about recognizing that a one-size-fits-all approach just doesn't work when it comes to life insurance. These riders allow you to address specific concerns and potential needs, whether that's covering long-term care expenses, or protecting your family in case of an accidental death, or waiving those premium payments if you become disabled.
Let's take a closer look at some of these, I think, to give everyone a better understanding of how they work and who might benefit from them.
Sounds good. Let's start with the chronic illness accelerated death benefit rider. This one can be really valuable for people who are concerned about the financial strain that a chronic illness can place on their family. It allows you to access a portion of the death benefit if you meet certain criteria related to your health and your ability to do those everyday tasks.
Which can be huge, especially when you consider that statistic we talked about earlier about the annual health care costs. associated with chronic conditions.
Absolutely. It's all about having that financial safety net in place. If a health crisis hits, instead of having to drain your savings or rely on potentially expensive loans, you have access to those funds from your life insurance policy to help cover those costs.
And the critical illness accelerated death benefit rider. That's another option that can provide financial support during a health crisis, right?
That's right. This rider kicks in if you're diagnosed with a qualifying critical illness, like a heart attack, stroke, or cancer, and it gives you access to part of that death benefit, which can be a lifeline for covering those medical expenses, or lost income, really any other financial needs that come up during a difficult time.
Almost like having an extra layer of protection on top of your regular health insurance, right? Providing that financial cushion when you need it most.
Exactly, and it's important to point out, these accelerated death benefit riders do reduce the total death benefit that would ultimately go to your beneficiaries. But for a lot of people, that peace of mind and that financial support they offer during a critical or chronic illness outweighs that reduction.
The overloan protection rider. This one can be a lifesaver, literally, if you've taken out loans against your policy and your cash value is getting low.
Right. It's designed to prevent your policy from lapsing because of those outstanding loans. So if you can't make those loan repayments for whatever reason, this rider steps in and ensures your coverage continues, though it might mean a reduced death benefit for your beneficiaries.
So it's like a safety net that prevents your policy from collapsing under the weight of those loan obligations, guaranteeing at least some financial protection for your loved ones.
And then there are those riders that offer additional coverage, like the accidental death benefit rider and the children's benefit rider.
Yeah, the accidental death benefit rider provides an extra payout to your beneficiaries if your death is caused by an accident. It's a way to boost that coverage and add another layer of financial security for your family.
And the children's benefit rider lets you add term life insurance coverage to your policy for your children. So it's a way to ensure their financial well-being is protected as well, just in case.
And we even have some riders that step in to help if you become disabled, like the disability waiver of monthly deductions rider and the disability waiver of premium rider.
These can be incredibly helpful if you're suddenly unable to work because of a disability. So, the disability waiver of monthly deductions rider takes care of those monthly policy charges, while the disability waiver of premium rider covers those premium payments entirely. So this ensures your coverage stays in force, even if your income stops.
It's like having that built-in backup plan for your life insurance, just in case.
It's all about planning for the unexpected and ensuring your financial security no matter what life throws at you.
And if you're looking for a way to structure your death benefit payout, so it provides a steady income stream for your beneficiaries, there's the income protection option endorsement.
Oh yeah, this one gives you choices. You can go with an initial lump sum, a guaranteed monthly income stream for up to 25 years, a final lump sum, or even a combination of those. It's all about tailoring that death benefit payout to best suit the needs of your beneficiaries.
Almost like creating a personalized financial roadmap for your loved ones, right?
Yeah.
To make sure they have those resources they might need after you're gone.
That's a good way to put it. It's about taking control of your legacy and making sure you leave a lasting, positive impact on those people who matter most.
And finally, we have the concierge planning rider, which offers some pretty unique services that go beyond what you typically expect from a life insurance policy.
Right. This rider gives you access to a whole suite of services from Everest Funeral Package, LLC, including help with funeral planning, document storage, preparation tools, and more. It's about easing the burden on your loved ones during a difficult time by providing them with that practical support and resources.
It's a really thoughtful addition. It really shows that Transamerica is committed to supporting its policyholders and their families in a holistic way.
It goes beyond just providing that financial security. It's about offering tangible help and resources when families were going through those challenging times.
All right, so we've really gone through the details of this policy, explored all those features, and even ventured into the world of optional riders. But before we move on, I want to highlight one more section of the brochure, the product details.
Ah, yes, the nitty-gritty details. They're essential if you really want to understand how this policy works. It can be a bit dense, I'll admit, but it's worth taking the time to read through it carefully.
They cover a lot of ground in this section. They outline specifics like the minimum face amount, the no-lapse guarantee period, the death benefit options that are available, and much more.
They also break down the fees and charges associated with the policy, things like that monthly policy fee, the cost of insurance, and the charges for those index accounts.
Understanding those costs and how they might affect your cash value growth over time. is really important.
Transparency is crucial when it comes to financial products, right? And it seems like Transamerica has tried to be upfront about those costs involved with the FFIUL today.
They also explain how withdrawals and loans work, including the minimum and maximum amounts, the interest rates, and how those could potentially impact your policy's cash value and death benefit.
Smart to understand all that. Before you make any decisions about accessing your funds, withdrawals and loans can be useful tools, but you got to use them strategically so you don't accidentally jeopardize your coverage or end up with unnecessary costs.
And they even go into detail about features like dollar cost averaging and the automatic transfer rule, which can help you automate your cash value allocation and rebalancing.
Those features can be really handy for people who want to take a more hands-off approach to managing their policy. They can help make sure your cash value is allocated according to your chosen strategy without requiring you to constantly check in and make adjustments.
So whether you prefer a more active or passive approach, there are options for you. It's all about making the policy work for you.
Choice and flexibility really seem to be recurring themes with the FFIUL too, which is great to see in a life insurance product.
For sure, for sure. It feels like they've really thought about how to meet a variety of needs and preferences, giving those policyholders the tools to tailor their coverage and manage their funds in a way that aligns with their financial goals.
And it's not just about the individual policyholder either. They've also included options for adding coverage for spouses and children, recognizing that financial security often involves the whole family.
You're right, the base insured rider and the children's benefit rider. Those allow you to extend coverage to your loved ones, making sure their financial well-being is protected too.
It's about creating that comprehensive financial safety net. That encompasses the entire family, providing peace of mind and protection for everyone who matters most.
So we've gone through the details, explored those features, and even ventured into the world of optional riders. But before we wrap up this section, I want to pose a question to you. What does all this mean for you?
That's the key question, isn't it? We've covered a lot, but it all comes down to this. The Transamerica Financial Foundation IUL-2, it's a flexible and versatile life insurance policy, offers this unique blend of protection, potential for growth, and those tax advantages.
Yeah, it's not just about leaving a financial legacy behind. It's about having a financial tool that can adapt to your changing needs throughout your life. Whether you're worried about outliving your savings, covering healthcare costs, or just simply making the most of tax-advantaged growth, this policy offers a lot of options.
But it's not a magic bullet, right? It's about understanding your individual needs, how much risk you're comfortable with, and really what your long-term financial goals are. It's about taking the time to compare different options, ask those questions, and make an informed decision that aligns with your unique circumstances.
And that's where a qualified financial professional can be so valuable. They can help you navigate those complexities of life insurance, figure out your needs, and recommend a policy that's the right fit.
It's an investment in your financial future, and it deserves careful consideration and expert guidance. Now, we've given you a lot to think about, but there's even more to come. In part 3, we're going to shift gears a little bit and explore some critical questions that go beyond the brochure.
We'll delve into some potential downsides, alternative options, things you should consider before making a final decision. So, stay tuned.
Welcome back to the final part of our deep dive into the Transamerica Financial Foundation IUL-2. We've spent the last 2 segments really unpacking this brochure, exploring all the features and benefits, and, as with any financial product, it's crucial to kind of look beyond the marketing and ask some tough questions.
Right. I mean, those brochures are designed to highlight the positives, but it's our job to dig a little deeper.
Exactly. So let's put on our critical thinking caps here and explore some potential downsides, alternative options, and things that the brochure might not explicitly address. And I think a good place to start is with fees. We touched on them earlier, but it's important to remember that IULs can have pretty complex fee structures. The brochure lists those various charges, but how those actually play out over time and impact your cash value growth, well, it can be hard to predict without running some pretty detailed scenarios. Yeah, and those fees can vary based on a lot of factors. Your age, your health, how much coverage you choose, even the specific riders you add. It's not always a simple calculation.
That's why it's so important to work with a financial professional who can create those personalized illustrations for you. They can help you see how different scenarios might play out and really determine whether those potential benefits of the FFAUL2 outweigh the costs in your specific situation.
And speaking of personalized illustrations, it's good to remember that those are still just hypothetical projections, right? They're based on assumptions about things like future market performance, interest rates, and other economic
And
factors.
those assumptions might not always pan out, right? So your actual results
Hmm.
could be higher or lower than what those projections are showing. It's not a guaranteed outcome. It's really important to go into this with realistic expectations.
Now, the brochure talks about the potential for tax-free withdrawals and loans, which can be a big draw, obviously, but there are some catches, right?
There are definitely some catches. There's some very specific rules and limits around how you can actually access those funds without having to pay taxes. Like, if you withdraw more than your basis in the policy, you might owe taxes on those withdrawals. And you might be wondering, what is basis?
Well, your basis is basically the money you've already paid into the policy through your premiums.
Right, that makes sense.
Sure.
And if you take out a loan and don't repay it, well, that outstanding balance could be deducted from the death benefit that would go to your beneficiaries. So it's super important to understand these details before you decide to tap into your policy's cash value.
Yeah, it's all about using those tools strategically and staying within those guidelines to maximize those tax benefits and avoid any unwanted surprises down the road.
Now, the brochure makes a pretty strong case for the FFIUL2. Now,
And
we got to remember, it's not the only option out there. There are other types of life insurance policies, and they each have their own pros and cons.
right. Term life insurance, for example, can be a more affordable option if you only need coverage for a specific period of time, like while your kids are young or you have a mortgage. It doesn't have the cash value component of an IUL, but it can be a cost-effective way to get that substantial death benefit for a limited amount of time.
And then there's whole life insurance, which offers guaranteed premiums and a guaranteed death benefit, along with cash value growth that's usually tied to a fixed interest rate. It's considered more conservative, right,
Yeah.
compared to IULs, but it might not have the same potential for growth.
Right. It really all comes down to what's most important to you. Are you prioritizing affordability, guaranteed benefits, or that potential for higher returns? There's no single best type of life insurance. It all depends on those individual needs and circumstances.
The brochure spends a lot of time talking about Transamerica's financial strengths and stability, which is certainly reassuring. But what about the FFUL2 policy itself? Are there any specific risks associated with this type of policy?
Well, as with any IUL, how those underlying index accounts perform is going to affect how much your cash value grows. If those indexes don't do well, your returns could be lower than expected, even with that guaranteed minimum interest rate.
And remember those cap rates and participation rates we talked about. Those can change over time, and that can impact your potential for growth, too.
Yeah, it's not a set it and forget it type of investment. Requires you to stay informed and maybe adjust your strategy as needed, as those market conditions change, as policy terms change over time.
Another thing to keep in mind is that IULs can be pretty complex. The brochure does a decent job of explaining things, but there are a lot of moving parts.
Yeah.
And it can be tough to fully grasp all the nuances without having some financial expertise.
And that's where working with a knowledgeable financial professional is so valuable. They can break down those complex aspects, explain the potential risks and rewards, and really guide you through that decision-making process.
It's like having a really experienced guide,
Yeah.
helping you navigate a new and challenging terrain, right? They can translate the jargon, answer your questions, and really look out for your best interests.
Exactly. Choosing a life insurance policy is a big decision, and it's not something you should rush into without that professional guidance.
So as we wrap up this deep dive, let's bring it all back to you, the listener. We have explored the ins and outs of the Transamerica Financial Foundation IUL2, but we've also raised some important points that go beyond just what's in that brochure.
Right. It's about empowering you with the information you need to make a smart decision that aligns with your financial goals and your risk tolerance.
Exactly. We want to leave you with one final thought-provoking question. The brochure talks a lot about the flexibility of premium payments. So how could you use that flexibility to your advantage? How could you make it work with your own financial goals and the different stages of your life?
That's a great question to ponder as you continue your research. And talk with a financial professional. Life insurance is a powerful tool, and the Transamerica Financial Foundation IUL2 offers a really unique set of features and benefits. But ultimately, the decision of whether it's the right fit for you, well, that's up to you.
We hope this deep dive has given you the knowledge and the insights you need to make those informed decisions about your financial future. Until next time, keep learning and keep asking those tough questions